Good evening, everybody. I want to show you a trade that I did on Monday. Today is Wednesday. Been a couple days before I get a video out. Sorry about that, but I'm going to cover it now. So, again, this is Wednesday. This trade was done on Monday, 2 days ago. This is a 1 minute chart of the SPX. So, what happens is when you have really, really high IV, like we have right now, the market can move 100 points in 15-20 minutes, which it makes it for amazing day trading. So when you have really, really high IV, right before the close, you can still get just astronomical prices for selling spreads, especially in SPX. So this is what I want to show you that I did. So let's come back and check out Monday, which is right here. So let me highlight the close, which this is the close of Monday right here. So let me bring down my trade screen. I want to show you the trade that I did. This is the 16th. Today is the 18th. So this is the 16th on Monday. I sold an SPX vertical call spread 2400, 2410, so $10 wide. I sold it for a $2.50 credit, which, okay, that's perfectly doable. People can do it all the time. But check out when the trade was filled. This trade was filled a minute and 45 seconds before the close of the entire day. So within a minute and 45 seconds of the close, I sold this spread for $2.50. Okay, now let's go see where SPX was. At 15:58 in the afternoon, right here, we were at 23.85. Okay, that's $15 out of the money a minute and 45 seconds before the cash session closes. That is astronomical IV. This is the kind of thing that can happen in an environment like this. I mean, it's almost just there for the taking. So, what else was I looking at? Let me bring down the NYSE tick chart. So we'll bring that down here. This is today. Let's go back to Monday, right here. And let's find, here's 1550, and then, okay, this is the rest of the afternoon. All right, and this is a 1 minute chart on the tick chart also. So from 1550 all the way until 1558, we couldn't get above negative 600 ticks, which if you don't know what the tick chart is, it measures buying pressure and selling pressure on the New York Stock Exchange. So when the tick chart is negative, that means there's more selling pressure than there is buying pressure, obviously, with negative ticks. So the fact that we couldn't get even above negative 600, that is massive selling pressure. The market was not going to be able to overcome that. So that is what I was looking at also to see what the internals of the market were doing. And since we had massive selling pressure, selling an out-of-the-money call spread was free money, as close as you can get to it. So way down here, I sold a call spread that was way up here, when knowing that with the way the tick chart was, we were not going to rally the last minute and 45 seconds into the close. And the fact that I could get $2.50 on a $10 wide spread, that's juicy. That's really, really juicy. So that's something that I try to do on Mondays, Wednesdays, and Fridays when SPX has weekly options that expire. So this is always something I do on the expiration date. If you want to take a look at it, this expired 16th of March 2020. So I always do it on the day of expiration. It's something where, I mean, prices are flying around like crazy right before the close. So you can get really, really juicy fills like that. So that's the trade that I wanted to show you guys. I wanted to show you what I look for in the tick chart, what I look for. I try to pick round numbers when it comes to the spreads that I sell. If we did get a small bounce into the close, 2400 would probably reject. So that's why I chose 2400, knowing we were well under that. So that's the reason I chose the spread that I did. I showed you what I look for in the tick chart, and then what I look for in the actual chart itself. So that's what I want to show you guys tonight. Hopefully we can get, I wasn't able to get one today. I was in the meeting. It kind of upset me, and the meeting ran over. So I wasn't able to get one today, although I tried, but it just to no avail. I wasn't able to get the trade filled. So, but it was a really, really good day for that again today. We're going to try again Friday, see if we can get the same thing going. And also, if we continue to have a down week, like SPX was down 131 points today. So if we continue to have a down week, then we can do the Friday end of day trade that I've covered in some of my other videos. If you want to go check those out, we can actually probably do both of these trades, which would be awesome, actually, if we can. But the way the Friday afternoon trade works, might not be able to do that. If we do, we're going to sell it on the put side. This is always the call side I try to do this on. But on the Friday, we're always looking for a huge market rally into the close, because the shorts don't want to go into the weekend short. They might get run over on Monday, and they can't have that. So if it's a really big down week, that's something where you look to buy out of the money call spreads. And again, if that's something you guys want to look at, check out my other videos. We'll try to do one of those on Friday, maybe sell a put spread well out of the money, and do this just the opposite way. So hopefully everybody has a great week. If you find value in this, hit the like button, and we'll talk to you guys later.